Welcome to The Explainer. So there's this huge shift happening in India's economy right now. On one side, you've got a new rule that's really spooking some of the world's biggest investors. But on the other, a totally different rule is being praised for making the markets fair. So what's really going on here? Let's dive in and break it down.
You know, this quote really nails it. India is right in the middle of a major transition. It's moving away from what some might call opportunistic growth and stepping towards a system built on transparency and solid rules. We're going to look at two big changes that show you exactly what this new economic playbook looks like.
All right, first up, we've got a landmark Supreme Court ruling that involves the massive investment firm Tiger Global. And trust me, this decision has sent a real shockwave through the world of foreign investment, signaling a huge change in how India is enforcing its tax laws.
So, for decades, foreign investors had this popular playbook, a technique known as treaty shopping. The idea was pretty simple, really. You'd route your investment into India through a country like Mauritius, which had a really sweet tax deal with India. And that would let you legally slash or even totally wipe out your tax bill on any profits.
So here's the breakdown of how this little shortcut actually worked. A U.S. firm, like Tiger Global in this case, would create an entity over in Mauritius. That Mauritian company would then turn around and invest in a super valuable Indian company, like the e-commerce giant Flipkart. Then, when it was time to cash out and sell that stake, like they did to Walmart, the profits were basically shielded from Indian taxes because of that treaty.
Well, the Supreme Court just slammed that door shut, for good. They used this principle called substance over form, which basically means they looked past all the paperwork and asked, what's really going on here? The court decided that the company in Mauritius was just a pass-through, a conduit, and the real entity calling the shots and pocketing the money was the parent company back in the U.S. And because of that, those profits are taxable in India.
And we're not talking about a small slap on the wrist here. This ruling gives the green light for the Indian tax department to go after a claim of nearly 1,000 crore rupees. That's well over $100 million US. It's a massive signal that the government is serious about cracking down on these kinds of tax avoidance setups.
You can bet the investment community reacted, and fast. This quote just captures the mood perfectly. See, for years, investors had counted on these treaty structures. They were a predictable, almost standard part of doing business in India. So this sudden change has definitely created a lot of uncertainty and rattled foreign capital.
Okay, so while that ruling is totally reshaping the rules for foreign investors, another major change is happening right inside India's own stock market. We're pivoting from international tax law to the trading floor, where another fundamental rule is being completely rewritten to make things more fair for everyone.
So India's market regulator, SEBI, is completely overhauling how a stock's final closing price gets decided. They're ditching the old system, which was basically an average price over the last 30 minutes and could be messed with, and bringing in a new, dedicated auction system. This new way of doing things, it's the standard practice in most major global markets.
And look, this isn't just some boring technical tweak. This is a big deal. It's all about building a fairer, more transparent, and much stronger market. This new system helps huge passive funds get a more accurate price, it makes sure derivatives settle correctly, and at the end of the day, it just boosts confidence in the integrity of the entire market. And this isn't some far-off idea either. As you can see from the timeline, the rollout is already set for 2026. That shows a clear, firm commitment to putting this global standard into practice.
So, let's step back. On one side, you have a new rule that's tightening the screws on foreign investors, and yep, it's causing some uncertainty. On the other side, you have a rule that's making things more transparent for everyone in the domestic market. So what gives? How do these two totally different moves actually fit together? And this is where it all clicks into place. Even though one action feels kind of restrictive and the other feels constructive, they are both sending the exact same signal. India is making a clear move towards an economy built on real institutional integrity. It's choosing the rule of law over convenient loopholes, and it's lining itself up with global standards for transparency. But that brings us to the million-dollar question, or maybe billion-dollar question. We've heard that foreign investors are spooked. So you gotta ask, right? Does this new stricter environment risk scaring capital away from India?
Well, if you look at the actual numbers, they tell a really fascinating story. In the very same week that all this news broke, funding for Indian startups saw a massive jump. We're talking over 290%. This seems to suggest that for a lot of investors, the fear of missing out on India's growth story is way more powerful than the fear of some new rules.
So, where does this all leave us? What does this actually mean for the future of putting your money to work in India?
So what we're seeing really is what looks like a very deliberate strategy playing out. It seems like India is making a calculated trade-off. It's accepting some short-term anxiety and uncertainty from investors, but in exchange, it's building a more stable, predictable, and trustworthy economy for the long haul. So the question for investors is no longer just about the opportunity, it's about whether they're willing to play by a new, more transparent set of rules.
So what do you think? Is this a brilliant long-term strategy, or is it a risky short-term gamble? Let us know your thoughts down in the comments. And for more explainers that cut through the noise on the big shift shaping our world, make sure you subscribe. Thanks for watching.